Let's start with an uncomfortable truth. Most investors will never become wealthy, not because they are unlucky, not because the market is unfair, and not because opportunities don't exist. The world has never offered more access to investing than it does today. Information is free, trading is easy, capital moves faster than ever. And yet, most people remain exactly where they started. This is not a market problem. It is a thinking problem. Charlie Munger spent his entire life observing human behavior, not just markets, not just businesses, but the patterns people repeat when money is involved. And what he saw was simple. People don't fail because they lack intelligence. They fail because they lack discipline. Most investors believe wealth is built by finding the right stock, the right time, the right strategy. Munger believed the opposite. He believed wealth is destroyed first, quietly, slowly, through bad habits and bad thinking. People chase excitement. They chase stories. They chase the feeling of being smart. They confuse activity with progress. They confuse confidence with competence. And the market is always happy to take advantage of that confusion. Here is the brutal truth. The market does not need to trick you. It simply waits for you to trick yourself. Most investors do not lose money in spectacular crashes. They lose it in small, repeated decisions. Overtrading, overconfidence, impatience. They abandon strategies too early. They react to noise. They change direction every time uncertainty appears. Munger often said you don't need to be brilliant to succeed. You just need to be less foolish than average. But that is harder than it sounds. Because foolishness feels good in the moment. It feels active. It feels exciting. It feels intelligent. Patience feels boring. Inaction feels uncomfortable. Waiting feels like doing nothing. And that is why most people stay poor, not because wealth is complex, but because simplicity requires self-control. In this episode, we are not talking about how to get rich fast. Munger never believed in that. We are talking about why most investors never escape the same cycle, the same mistakes, the same disappointment, and more importantly, how to stop making the mistakes that quietly destroy wealth. Because in investing, survival comes first. And those who survive long enough eventually let time do the work. Most people believe they are poor because they missed opportunities, the right stock, the right timing, the right trend. But that belief is comforting because it removes responsibility. Charlie Munger saw it differently. He believed most people fail not because they lack opportunity, but because they lack discipline. Discipline in how they think. Discipline in how they act. Discipline in how they respond to uncertainty. The modern investor is surrounded by noise. Prices update every second. News breaks every hour. Opinions flood every screen. Without discipline, the mind starts reacting instead of thinking. People buy because others are buying. They sell because others are panicking. They change strategies, not because fundamentals changed, but because emotions did. This is not bad luck. This is bad process. Munger often warned that consistent stupidity beats rare brilliance, and the market rewards consistency, even when it is the wrong kind. Undisciplined investors repeat the same cycle. They feel confident after a few wins. They increase risk at the worst possible moment. Then reality corrects them. Losses follow. Confidence collapses. And instead of learning, they blame the market. Discipline means doing the boring things well, sticking to a plan when it feels uncomfortable, doing nothing when nothing needs to be done. But discipline has no adrenaline. It offers no excitement. It provides no stories to brag about. That is why it is rare. Most people don't want discipline. They want reassurance. They want confirmation. They want action. The market gives them all of that at a cost. Munger understood something deeply unsettling. You don't rise to the level of your intelligence. You fall to the level of your habits. And habits built on emotion will always break under pressure. This is why poverty persists even in a world full of opportunity. Not because chances are limited, but because discipline is. In investing, intelligence opens the door. Discipline determines whether you stay inside. Most investors believe success comes from skill, picking the right stock, making the right move, outsmarting the market. Skill feels powerful. Skill feels controllable. Skill feels like something you can prove. Time does not. Time is quiet. It does not show progress every day. It does not reward impatience. And it does not care how confident you feel. Charlie Munger understood this better than almost anyone. He believed time was not just a factor, it was the main advantage. Most people dramatically overestimate what they can achieve in a short period and severely underestimate what steady behavior can produce over decades. They expect results too quickly, and when results don't arrive, they assume something is wrong. So they change strategies, they abandon plans, they reset progress again and again. This constant restarting is invisible at first, but over time, it becomes fatal. Munger often emphasized that great wealth comes from a few correct decisions, combined with long periods of patience, not constant action, not constant adjustment, not constant improvement, just time, allowed to work without interruption. But patience is psychologically painful. It offers no feedback, no validation, no excitement. And so people interfere. They sell too early. They rebalance too often. They chase the next idea before the previous one has time to mature. In doing so, they interrupt compounding. Compounding does not need brilliance. It needs consistency. Even average decisions, when left alone long enough, can outperform brilliant decisions that are constantly disrupted. This is why most investors never reach meaningful wealth. They never stay still long enough. They want proof before patience. They want certainty before commitment. But time only rewards those who commit without constant reassurance. Munger knew this truth was uncomfortable because it removes the illusion of control. It suggests that doing less, waiting longer, and trusting process is often more powerful than trying harder in investing. Time is not the reward. Time is the test. Most people assume intelligence is an advantage in investing. More knowledge, more analysis, more confidence. It sounds reasonable, but reality is less kind. Charlie Munger spent decades watching very intelligent people lose money, not because they were careless, but because they trust their intelligence too much. Intelligence creates a subtle danger. It makes mistakes feel justified. Smart investors can always explain why they are right. They build narratives. They connect dots. They rationalize outcomes, and when things go wrong, they don't question the process. They adjust the story. This is how intelligence becomes a trap. Munger warned that partial understanding is worse than ignorance, because ignorance knows its limits. Partial understanding does not. People who know a little believe they know enough. They overestimate their edge. They underestimate uncertainty. And the market punishes that imbalance. Highly intelligent investors often trade too much. They react too quickly. They assume every movement has meaning. They mistake complexity for insight and activity for progress. But markets do not reward cleverness. They reward correctness. And correctness does not need to be complex. Munger believed wisdom was subtractive, not additive. It was about removing bad ideas, removing bad habits, removing unnecessary decisions, not piling on more analysis. The smartest investors are often those who know when not to act, when not to speak, when not to interfere. But intelligence pushes people in the opposite direction. It encourages involvement. It demands expression, and so mistakes compound. This is why some of the most educated investors perform poorly. They are not short on insight, they are short on restraint. Munger admired simplicity because it reduced the chance of error, not because it was easy, but because it was robust. In investing, being smarter than average is optional. Being less foolish is essential. When investors fail, they rarely fail because they did nothing. They fail because they did too much. Too many trades, too many opinions, too many adjustments. Action feels productive. Inaction feels irresponsible. So people stay busy. Charlie Munger believed this was one of the most destructive habits in investing. He often said that the big money is not made in the buying or the selling, but in the waiting. Most investors cannot tolerate waiting. They want constant engagement. They want to feel involved. The market feeds that desire with alerts, with headlines, with endless commentary. Every price movement invites a reaction. Every news item demands an opinion. And so people respond again and again. They tweak portfolios. They rebalance too often. They chase what is working. They abandon what is quiet. Each decision feels small, harmless, rational, but collectively, they create friction. Fees accumulate. Taxes compound. Mistakes multiply. Munger understood that doing nothing is not passive. It is a deliberate choice. Inaction requires confidence in process, and confidence in process requires humility. You must accept that you do not need to respond to everything, that not every signal is meaningful, that not every opportunity is yours. Most people cannot accept this. They want to be involved. They want to participate. They want to prove they are doing something. But investing does not reward effort. It rewards positioning. Once you are positioned correctly, the smartest move is often to stop moving. Munger built his philosophy around concentration and patience. Few decisions, made carefully, held for a long time. This approach looks simple, but it is emotionally difficult because it removes excitement and replaces it with silence, and silence makes people uncomfortable. That discomfort is why most investors overtrade and why most returns are given back over time. In investing, activity is not a virtue. Restraint is. Most investors believe the market is their enemy, volatility, crashes, uncertainty. But that belief is misleading. Charlie Munger was very clear about this. The market does not force bad decisions. People do. The market offers prices. It does not demand action. It does not insist you buy. It does not pressure you to sell. Those pressures come from inside. Fear when prices fall, greed when prices rise, envy when others seem to win faster, regret when past decisions don't work out. These emotions feel external, but they are not. They come from human nature. Most investors know what they should do. They should stay patient. They should stick to their plan. They should ignore noise, but knowing and doing are not the same. Under pressure, logic weakens, habits take over, people panic sell not because data changed, but because discomfort became unbearable. They chase returns not because fundamentals improved, but because watching others succeed feels painful. Munger believed self-control was the rarest advantage in investing. Not intelligence, not information, but emotional restraint. He often said that investing success is determined by temperament, not brains. This is uncomfortable to accept because it means there is no one else to blame, not the media, not the system, not institutions, just behavior. The investor who survives is not the one who predicts correctly, it is the one who does not self-destruct. This is why discipline matters more than insight, why patience matters more than speed, and why character matters more than cleverness. In the end, the market is neutral. Your reactions are not. Charlie Munger never promised people they would get rich quickly. In fact, he warned them not to try. He understood something most investors refuse to accept. The desire to get rich fast is usually the reason people stay poor, because speed invites mistakes. And mistakes compound just as powerfully as returns. Most people search for brilliance. They want the next great idea, the next winning stock, the next strategy that feels different from everyone else. Munger searched for something quieter. He searched for ways to avoid stupidity. He believed that investment success is not about doing extraordinary things. It is about avoiding obvious errors, repeatedly, for decades. Think about that. Not brilliance, not genius, not perfect timing, just fewer mistakes. Most investors fail because they make too many decisions. They trade too often. They react too quickly. They confuse movement with progress. Each decision feels small. But over time, those small decisions stack up and slowly erase the advantage that time could have created. Munger believed time is the most powerful force in investing. But time only works for those who allow it to. It does not reward impatience. It does not reward excitement. And it does not reward ego. It rewards endurance. It rewards people who can sit through boredom, who can tolerate uncertainty, who can watch others get rich faster and still stay the course. This is why temperament matters more than intelligence, why character matters more than credentials, and why discipline matters more than insight. Most people already know what they should do. They should spend less than they earn. They should invest in productive assets. They should stay patient. They should avoid unnecessary risk. But knowing is easy. Living with those choices is hard. Because discipline feels restrictive, patience feels unrewarded, and simplicity feels unsophisticated. The world celebrates speed. It celebrates complexity. It celebrates bold predictions. Munger rejected all of that. He chose consistency over excitement. He chose fewer decisions over constant action. He chose long periods of waiting over constant involvement. And over time, that choice made all the difference. Wealth, in his view, was not something you chase. It is something that grows quietly while you avoid ruining it. You do not need to be smarter than everyone else. You do not need to predict the future. And you do not need to win every opportunity. You need to survive your own impulses. Because, in the end, the market is not your enemy. Time is not your enemy. Your habits are. And the investors who build lasting wealth are not the ones who do the most. They are the ones who make the fewest irreversible mistakes. They let time work. They let discipline guide them. And they let simplicity do what brilliance often cannot.